Yes, welcome back. In today's session, we are going to introduce elements of financial statements. The financial statements are made up of key elements that provide information about entities' financial position and performance. So these elements helps users to understand what the business owns, what it owes, the owner's interest, the income being earned, and the expenses also incurred during a period. So let's start by asset. By definition, an asset is a present economic resource owned and controlled by an entity as a result of a past event. It has two types. We have non-current assets and current assets. So on the side of non-current assets, they are acquired by the entity to assist in earning revenue and not for resale. Yes, they are acquired by the business just to assist the business to earn revenues, not stock for resale. They are normally expected to be held in the business for the period of more than 1 year. Yes, they are expected to last more than for 1 year. Then on the types of non-current assets, we have tangible non-current assets and intangible non-current assets. So let's start with tangible non-current assets. These are assets we can see and touch. We can see them and we can touch them. So in other words, they are visible. They are visible. So the major examples, we have land and building, plant and machinery. We have furniture and fittings. We have office and equipment. We have motor vehicles. Yes, these ones we can see them. You can see land, you can see buildings, you can touch buildings. They are visible. In other words, they are visible. So on intangible and current assets, they are assets we cannot see. We cannot see them and you cannot touch them. In other words, they are invisible. They are invisible. The example includes goodwill. This is a repetition of the business. You can't see the repetition, so it is not visible. It is not visible. We have patents, copyrights, trademarks, and also the brand. Let's go to the current assets. These are not expected to last for more than 1 year. They are in most cases directly related to the trading activities of the firm. And examples, we have inventory, stock, we have account receivables, we have cash at the bank, and cash in hand. There are also many others, we shall see them. Let's go to liabilities. These are financial obligations of the business. It has also two types. We have non-current and also current liability. So non-current liabilities, they are expected to last or to be paid after 1 year. We have long-term loans from the banks. They are paid even after 1 year. They are paid in more than 1 year. We have bonds. We have debentures. Then on current liabilities, they are for period less than 1 year, and therefore will be paid within 1 year. Yes, they are paid within 1 year. Like account payables. Account payables. These are suppliers who supplied us goods on credit. So we have to pay them within 1 year. So we have also bank overdraft. Then on equity. Equity. This is the residual amount on the owner's interest in the firm after deducting liabilities from the assets. It is also known as net worth. So as you can see by the equation, asset minus liabilities equals to capital, to equity. Yes, this is the residual amount after deducting what? All liabilities. Let's also discuss on the end of year adjustments for income and expenses. So pay attention on this. They are mostly likely to be asked. So we are going to see what are the accrued expenses, what are prepaid expenses, what are the accrued income, and also prepaid incomes. So allow me, let's go by the accrued expenses. These are expenses whose service the business has enjoyed but has not paid for them. The service has already been enjoyed, but you have not paid for them. These are accrued what? The accrued expenses. They can also be called unpaid, outstanding, paid in arrears, payments that is made after the services has been provided, as I have seen by definition. They can also be called pendings, earning but not yet received. So whenever you see outstanding and paid in arrears, these accrued expenses, they are being recorded in current liabilities. Yes, they are being recorded in current what? In current liabilities. For example, we can say you can have rent for the year, and also you have accrued rent for the previous year. Then you make the total. If you are going to record, what are we going to record in statement of profit or loss account? It's the total. The rent for this year, even the rent for the previous year, the outstanding rent, the accrued rent. Yes, you will take the total of the rent in this year, you add the accrued rent, then the total will be recorded in statement of profit or loss. Then this accrued rent for the previous period, it is the one which is only being recorded in statement of financial position in what? In current liabilities. I will repeat. Only this accrued rate, it's the one that is going to be recorded in statement of financial position in what? Under the current liabilities. Let's go to prepaid expenses. These are expenses whose service the business has not enjoyed, but it has paid for them. Yes, they are prepayments. They paid in advance. Yes, they are expenses whose service the business has not enjoyed, but it has paid for them. Yes, they are prepayments. They are payments in advance. So they should be recorded in current assets. Yes, as your asset, they should be recorded in the current what? In the current assets. Here, there's an example. Let's assume you paid electricity in this year. This is the electricity paid. The electricity being paid in this year. And also, you have made a prepayment like for another 3 months in advance. You shall get the electricity paid, then you less what? You less that prepayment, though that amount that you have paid in advance. The total you get, it's what you record in the statement of profit or loss. Hope you are getting it. So this prepayment, it is being recorded in current assets. Only this prepayment that is being deducted from the electricity paid for the year, it's only one being recorded in what? In current assets. So in other words, you shall take the electricity paid, then you deduct the payment they paid in advance electricity, then the total you get, it's going to be recorded in statement of profit or loss, and then this paid in advance, this prepayment you have deducted, it's the one that you will record under what? Under statement of financial position under current asset. So let's go to accrued income. So the accrued income, it's outstanding income at the end of the period. Earned income but not yet received. Yes, it's the income earned but not yet what? Not yet received. It is also being recorded under current asset. So you will get the, let's assume you have gained like communication receipt, but let's use this example. We have rent income. You have gained income from rent in this year. There is also the income they owe you, which is outstanding. They have already You have already earned but not yet received. So if you are to receive it in this year, you will get the rent income. You add also the accrued rent income, then the total will be recorded in the statement of profit or loss. Then this accrued rental income that was earned but not yet received, it's the one that is going to be recorded under what? The statement of financial position under current asset. Hope you are getting these things. Huh? Let's go to prepaid income. This is an income whose service the business has not provided but has already received what? Cash. It has already received income. Yes, the service has not yet been provided, but the money has already what? Has already received. So it is also called income in advance, income for next period, income received in arrears. So the income received this year in excess. Yes, income received in this year in excess. This income it is recorded under what? Under current liability. You have an obligation to do what? To provide that what? To provide that service. Yes. Here we have an example. We have rental income received, and then what you will do, you have rental income received. In that rental income received, you have to deduct the prepaid rental income, the one that you have not provided the service. Yes. you have to deduct it, and then the total you get, you will record it in the statement of profit or loss. Then this rental income, this prepaid rental income, it's only one that is being recorded in the statement of financial position under current assets. I will repeat, the prepaid income, it is recorded in the current liabilities, and we also deduct that prepaid income in the income that has been received for the year, in order to get what we record in the statement of profit or loss. So let's test our understanding. Question number 1. A business paid insurance for the next 6 months before the service were received. This insurance is classified as, I will repeat the question, the business paid insurance for the next 6 months, before the service were received. This service is classified as A, accrued expenses, current liability, prepaid expenses, accrued income. What is the answer? The business paid insurance for the next 6 months. This is what? What is the answer? What do you guess? The answer is C. This is prepaid expenses. They have paid in advance. You can see for the next 6 months they have paid in advance. So the right answer is C. The next question, which statement correctly describes the accrued income? Do you remember the accrued income? We have number A, income received before the service is provided. Income earned but not yet received. The expense paid before the service is received. Expense incurred but not yet paid. What do you guess? What is the answers you have seen? The income earned but not yet received. It's what we have seen as the accrued income. Let's go for the next question. If the business has assets of 15 million and liabilities of 5.5 million, what is the owner's equity? Do you remember the formula? How do you get the equity? Asset minus liabilities. So what is the answer? The answer is A. Let's see the calculations. Equity equal to assets minus liabilities. Yes, you should get this 15M, then you deduct 5.5. The right answer is 9.5M. This is the owner's equity. Yes. Question number 4. Which of the following is current liability? We have goodwill. Is the goodwill a current liability? We have land and a building. Is it a current liability, land and building? We have bank overdraft. We have trademark. As I've seen, this one is included in intangible assets. This is what? Tangible assets. Yes, this is what? Bank overdraft. What do you guess? We have trademark. The right answer is bank overdraft. Yes, as you have seen, the bank overdraft, it's under current liability. So question number 5. Income earned but not yet received is called what? Prepaid income, accrued income, accrued expenses, prepaid expenses. What is your answer before I bring the answer? Sorry. Yes, what is the answer? The answer is B, the accrued income. It's the income earned but not yet what? Received. So the income received before service provided is also known as what? Accrued income. Is it accrued income? Is it accrued expenses? Is it prepaid income? Is it prepaid expenses? What is the answer? The answer is C, the prepaid income. The prepaid income is the income received before the service are provided, as you have seen by definition. So I thank you for your attention. God bless you. See you in next session.